Hey everybody, how are you? John Napolitano here with Top Trading Pros. I hope everybody's doing well and enjoying their day so far. The purpose of this video is to cover three basic fears or reasons why people are afraid to trade options. And I speak to a lot of people. I speak to a lot of my students. I speak to a lot of individuals who want to learn, but they have specific objections or reasons why they think it might not be a good idea, or maybe they don't think they can do it. And I wanted to try to debunk some of those myths, because really, options has changed my life as far as its ability to bring supplemental income into my life, as well as to allow me to be the master of my own time. And I can't be any more grateful to that. So I want to try to pass as much of this knowledge on as I can to people who might just be on the fence about whether they think they can do it or not. So I'm going to go over some of the common things that people are a little bit afraid of, and I'm going to give you some three simple solutions to those three typical problems that people have. So the first one, basically, the main one that I hear, I would say the majority of the time, is options are too complicated. I mean, I've read a couple of books on options, and there's so many mathematical formulas, and there's so many Greeks I have to know. There's delta, there's gamma, there's theta, there's vega, there's all these all these Greeks and stuff like that. There's all these formulas I have to know. And I'm here to tell you that you don't need to be an expert in math. You don't need to be some computer programmer whiz. If that was the case, I most surely would not be in this business at all. You do not need to be super genius in order to trade options. What you need is a step-by-step process. And I've developed a process over the last several years that's a very common sense approach. It basically allows you to trade what's going on in front of you. It allows the markets to kind of show you what's going on, and you follow it step by step. So, you have to start from the perspective of the overall market. So forget about options for a second. What I tell students is, how do you trade the markets? And especially if you have a full-time job, how do you have time for that? Trade the markets. You have to have an overall take on the market itself. So I'm just going to share my screen with you really quick. I'm going to show you a little bit about what I'm talking about. So bear with me here, 1 second. I'm going to just show you just a quick step-by-step of what I mean. And then what we'll do is we'll go from there. So overall, when you're looking at the stock market, you have to assess what's going on in the Dow, the NASDAQ, and the S&P. So I have a rating system. It's a simple grading system that I teach my students. You could develop whichever one you want over the years, whichever one makes you the most comfortable. But every single week, you should really kind of have an assessment of the overall markets, not based on news, not based on like what's going on in the world or what like your neighbor says or what you hear at cocktail parties, but basically, typical analysis on the actual, the market itself. So I look at SPY, I look at QQQ, and I basically rate the market. And I'm not going to do that for you today. I'm going to show you kind of what I look at. I look at moving averages. I obviously look at price action, and I determine whether I'm bullish or bearish on the markets. That's my starting point. It's a very simple approach. And then with that overall grade, once I establish that grade, then I go down to the individual sectors within the markets to find the best opportunities within those sectors. So when you're looking for bullish opportunities, you obviously want the best stocks and the best sectors. When you're looking for bearish opportunities, you basically want the lousiest sectors in the lousiest situation and the lousiest stocks within those sectors. Like, for instance, energy today was very weak. And it's been very weak, obviously, for a little while here. It was, for the last month or so, the last 3 months or so, you can see energy would be the place where you should maybe look for shorting, for instance. Going long, you might look at technology because it's actually kind of bounced the last couple of weeks. So that kind of gives you a clue. So out of the universe of 10,000 stocks, now you're kind of narrowing it down. Once you've done that, once you find your favorite sectors to go long and go short, what you're going to do is basically go to individual stocks and decide which ones you want to go long and which one you're going to go short to add to your watch list. You build your watch list every week. And this is basically my, this is my basket trading strategy. Now, there's a lot more detail involved in figuring out, when to go long, when to go short, what to do. If you spend more time with me, you will figure all that out. But basically, that's the starting point. So it doesn't really sound too complicated so far, I'm sure. A lot of people scratch their head and say, well, that's it. I'm like, well, that's the starting point. The next thing is the most important, is you have to determine your best option strategy selection for the volatility environment that you're in. I teach my students how to do that in a step-by-step approach. It's called a BOSS strategy, best option strategy selection. Spend time with me in my boot camp for 2 weeks, and you will become an expert at that BOSS strategy, where you can start putting together your own watch list every week. The next thing that, basically after that, once you kind of put together your basket, now you can assess your watch list, and you could start putting on trades throughout the week. So it's really not that complicated. Once you've mastered that strategy, you're able to put together trades on a week by week basis based on what the market is telling you, not what you think the market might do or what you wish the market might do. So that is the starting point. So far, not too complicated, I would imagine. Everyone's like, wow, where's all the math? And there really isn't that much math. It's a lot of just a common sense kind of top down approach, which I kind of map out step by step in my classes. The second thing that people really talk about, and kind of some of the objections I've heard over learning options, is that there's no time. I work a full-time job. How am I going to read up on options and learn all these strategies and so on and so forth? Well, the way I like to compare that to is, listen, when you go buy a drill at Home Depot, you might have 500 different pieces to your drill. How many of them do you really use? Obviously there's dozens of different option strategies. I probably utilize 5 of them on a week-to-week basis. Obviously, some of them I use more than others. I have my favorites, obviously, for different reasons. But it's not as complicated as you think as far as putting together option strategies. Once you know a few basic rules as to what expiration date to select, what strike price to pick, and why. And you do have to know the Greeks a little bit, but understanding that they're just the dials on your car. They don't really control what you do. They just tell you where you're going, right? That's pretty much what the Greeks do for you. So once you learn those basics, it's really not as hard as people think, and it doesn't take as long as people think. So as far as the second thing people complain about is they say they just don't have time, and that I could understand. Time is the most valuable resource we all have. Everybody has the same amount of time, unfortunately, whether you're a billionaire, whether whether you're not a billionaire, or anything in between. Everybody has 24 hours in a day, 7 days in a week. So time is always something that kind of pushes up against people. What I tell people is this: if you could spend a couple of hours a week generating supplemental income in your portfolio, would you do it? And most people say absolutely. Some people have a second job. Some people drive Ubers at night, or they wait on tables. I used to wait on tables. I had plenty of part-time jobs to kind of supplement my income, because I never felt like my base salary at my current job was ever enough, right? So I've been in that boat many times throughout my career, many times throughout my life. And what options does is it kind of equalizes time. Whether you're trading one contract or 50 contracts, it's the same amount of time. It's the same trade. So you start with a small account and you work your way up. It requires the same amount of time commitment. And when you're swing trading options, like I suggested, when you're basket trading, when you're looking for like a basket of stocks, options rather, when you're going long and short, it really doesn't require too much maintenance on a day-to-day basis. You build your watch list over the weekend. You put on a couple of trades during the week, and you monitor them. And with today's technology, you have stop orders in place, you have your risk management in place. So really what you're doing is that, the main maintenance, or the main thing that you have to kind of watch is A, look for new opportunities, and B, just knowing when to make adjustments and when to abandon trades and stuff like that if the markets change or something happens. So I do midweek recaps. I give that to all my students. So you could just follow my recaps and kind of decide whether, okay, the market went from an A plus to down to a B minus. So now I need to get rid of some of my bullish trades. These are things that I give my students, but I teach you how to do this step by step. So assessing the markets on a daily basis only takes a couple of minutes. Risk managing in the right way, where not every one trade matters. If you trade in a basket, if one trade, God forbid, the CEO gets hit by a bus, It's not going to affect your portfolio to the point where you can't trade anymore, where you blow up your account. So effective risk management is one of the first topics that I cover in my classes and in our boot camp, and that is something that you will learn with us as well. So that's really important as well. But if you could earn, if you could potentially earn a supplemental income for a couple extra hours of work every single week, and enjoy it at the same time. I find that most people enjoy looking at charts and stock and looking at trades and ideas and stuff like that. It's very stimulating. I enjoy it. I find it a fantastic way to earn a supplemental income. It's fantastic. So you don't need a ton of time to learn this. You don't need a ton of time to master a few simple strategies that allow you to generate a monthly income. Okay. The third and final thing that people say to me is, John, I just don't have the money. I mean, I don't have the extra money to invest in the stock market. I'm really nervous about what's going on, and I only have a couple of $1,000s. Well, I got news for you. With options, with a leveraged options account, because options are leveraged, one contract equals 100 shares of stock. Options contracts are a lot cheaper than 100 shares of stock. So you really only need to open an options account with a small amount of capital, maybe one, maybe two, maybe $3,000. Obviously, the more the better. If you have a larger account, if you have a $50,000 or $100,000 account, that's great. You could just do more strategies. You can do maybe more things, but it doesn't mean that if you have a smaller account of only a couple of $1,000s, it doesn't mean that you can't do anything. So that's really important too. While you're learning how to trade options, if you're worried about losing that couple of $1,000s, I completely get it. Put it aside, open up your brokerage account, and you can sim trade. With today's technology, they give you sim accounts now where you can completely develop your option plan, develop your option strategy, develop your trade plan, develop your risk management. All these things you'll develop over time if you spend time with us in our boot camp especially, and you will be able to develop these strategies. And as you accumulate your wealth, as you develop, your account and save a few dollars here and there, you can then start putting on live trades. So, this is not a process that has to happen overnight. It's a process that can be gradual. It's a process that takes a little bit of time, but the investment in this, it's a lifetime investment. If you do this for a couple of minutes or a couple of hours a week, it will be a lifetime of potential reward. So just think about it from a risk reward standpoint. You start with a little bit of capital, a little bit of time, of your own personal time, and the rewards are potentially limitless. So to me, that's a fantastic reward to risk. And that's really what we teach our traders, how to assess reward to risk on every single trade that you take within context of your overall portfolio and your basket. So that is the three main things that people have trouble with. I just gave you those three solutions. So I hope to see all of you again soon. I think that, these are the three main things that kind of hold people back. And I think there's a lot of bad information out there. I'm here to tell you that all those roadblocks can be overcome with just a little bit of time and a little bit of dedication. You can definitely shine, that's for sure. So again, I hope this video was helpful. We are here for you always, toptradingpros.com, to learn more about us and to learn more about our strategy and our boot camp. And I hope to see you all there. Take care, everybody. Bye-bye.